Thank you. Good afternoon, everyone. It's a pleasure to be here. Italy is one of our favorite places in the world, so it's a real honor to be here. Thank you very much for the invite. Sorry I was late. Just a brief introduction. So I look after the international real estate investments at Qatar Investment Authority. You probably know most of our investments across Europe, US, and Asia. Today, I'm going to try and talk particularly about our investments in Italy. What I'd like to do, and I won't take too much time, what I would like to do is to briefly go through what have we done, what have we invested in Italy to date. Then briefly talk about what exactly it is that attracted us to Italy. And finally, maybe suggest some areas of potential, I don't want to say advice, but areas which might help attract Italian institutions more cross-border investments from across the world. So just one fact to start with, I was just reading this on Bloomberg while this morning, that for the year to date, if you look at commercial real estate investments that have come to Europe this year, the total amount that was invested in Europe by international investors was 166 billion euros. And the share of Italy in that investment was 4.5 billion euros. So that's 2.7%, which in my view, given the opportunity that is there in Italy, is a number that should definitely increase over time. And from our perspective, we have found it a very interesting market to invest in. So some of the assets that we have invested in that you might be familiar with, the first one, which is not far from here, is Portanova Milan. That's the development behind the Principe di Savoy, which includes the UniCredit headquarters, the Google headquarters, and the various other buildings around it, including the Diamond Tower. We started investing in that project in around 2012. It took us around 2 years to complete the transaction because of the nature of the transaction itself. And it took about another year for it to be fully leased up. From our perspective now, the whole transaction is worth above 2 billion euros and is generating a very nice yields. And we are very comfortable with the tenants that are in place. But the journey for the original investors was much longer. The original fund that invested in Portanova Milan invested about 14 years ago, and it took them almost 14 years to complete the transaction. The second place where we have invested in is Sardinia Resorts. So a few years ago, we purchased 4 hotels in Costa Smeralda, along with huge parcels of land connected to the hotels. Once again, these hotels, I'm sure the audience is quite familiar with them. They tend to open in the peak season, tend to attract a unique set of visitors, and from our perspective, produce very stable income, and they're attracting demand from all over the world. There's always new people coming into Sardinia. Historically, it was mainly an Italian destination. Then you had the Russians and Ukrainians coming in, and more recently you have Chinese, Turkish, Indian, Brazilian. So the mix is getting wider and wider, and that kind of flows into the story of why so many people are investing in the tourism sector in Italy. So the other 2 assets that we have invested in the tourism sector is the Excelsior Gallia in Milan, which we originally bought in 2005. And it took us a while to accumulate a number of real estate assets around the Excelsior Gallia and to put them all together and then refurbish it. And this year it opened. I hope if you guys have time to please go and visit the hotel. It has some fantastic restaurants and has been completely transformed. Along with the whole area, you know, the whole regeneration of that area, which is not just us, it's the support of the mayor and the various government institutions in Milan, and of course Portanova at the back. We are great believers in that whole district around Portanova, Gallia, and the train station. Some other investments which are smaller investments that we have done that you might not know about but worth mentioning is we bought the portfolio of almost 90 branches from Deutsche Bank around a year ago. It's a sale and lease back where we essentially bought the properties and leased it back to them. We also own the Credit Suisse headquarters in Milan near the Galleria. And we also have a JV with FSI, Fondo Strategico Italiano, where we are keen on investing more in the tourism sector in Italy with them. And we think FSI is a great partner to have to enable us to do that. So if you look at our investments, what is the common theme, and what exactly it is that attracted Qatar to come and invest in Italy in such a major way? I think taking a step back, most international investors, and particularly sovereign funds, whether they are from the Middle East or from Singapore or Norway, etc., the key thing they're looking for is stable income or stable capital appreciation. Majority of the sovereign funds do not have liabilities to manage immediately, but what they're looking for is preservation of capital, so some place where your money can remain safe and it will be worth more in the future than what it is today. And so real estate lends itself very nicely to delivering that objective. When we are underwriting commercial real estate, besides the initial yields that obviously everyone looks at when you look at an income-generating asset or a stabilized yield when you're looking at a hospitality asset, the other thing you look at is what is the potential for GDP growth and employment growth, because eventually the increase in real estate always happens because of what happens in the city itself. As the economy grows, as the employment grows, as the number of tenants increase in commercial real estate, or if it's hospitality, as the number of tourists increase, then automatically the income will go up. So on the tourism sector, it's very clear to see why Italy is such an attractive destination, with tourism inflows increasing tremendously from the new middle classes of the world, whether they are in China, India, Brazil, and also the American tourism has increased significantly in Italy as the euro has depreciated and the market has become more accessible. The other thing that makes Italy attractive to us is the human capital that's available here. And especially when you look at the financial services sector, Italy obviously has a fantastic history. It essentially invented banking, and wherever you go, whether it's New York, London, elsewhere, the top financial institutions you can see the contribution that Italians have made there. And that makes the financial services a very key stable sector for us to invest in. If you're buying a building that's rented to an institution that has a financial connection, you can be very comfortable when underwriting the leasing risk of that investment. One thing that's potentially missing here is maybe a financial hub, the way London or New York is, but we are great believers that places like Portanova Milan would enable Milan to head towards that goal. There is, of course, a lot to be done on the regulatory side, but we do believe that Milan should be a key financial center in Europe. The other two factors that attract us to Italy, one is obviously having good local partners. When you are a foreign investor looking at this market, having local partners that you can trust in, with who are on the same wavelength, who understand how business is done internationally, who bring the same kind of expertise, knowledge, and common sense that you would find elsewhere, whether it's London, New York, Singapore. And we found Italy to be fantastic in that respect, most of the partners that we have worked in Italy have been great long-term partners, and we hope to continue to expand our relationships with them. We are currently working on a potential listing on the Italian real estate market called the Coema Res, which is with the same partners with whom we did Portanova Milan. The idea is to create a listed real estate company that would invest in Italian commercial real estate. So all very positive in terms of areas which Milan or Rome or Italy can improve on in order to attract cross-border investment. I think the most important thing for international investor when they're looking at a market is transparency. What do I mean by transparency? I mean availability of data on market and clarity on regulations. So if you have grown in Milan, you would be very familiar with every street, with every nook, with every regulation, every part of tax legislation. You'd be very familiar with, if you're in the real estate industry, what price per square meter is each building selling on each district or each area. But as a foreign investor, when we look at it, for us, that data needs to be very accessible, handy, audited, and almost available in the same way that's available, let's say, in London, Paris, or New York. And Milan needs to progress further on that side. And some of that obviously comes from the investors in real estate themselves. They have to be transparent and make the data available to the different organizations. But the more data is available on what each building is trading at, what are the yields that are being traded at, and also on the financing side, the lending market, what is the cost of debt, what is the cost of capital, the easier it makes for foreigners to invest in this market. The second thing which is very critical for foreign investors is standardization of contracts, whether it's property contracts or finance contracts. They should be essentially interchangeable with London, New York, France, or any other market. The more you standardize the contracts, the more liquid that property or that investment becomes. It becomes accessible to a wider market. And it automatically lends itself to the third point, which is speed of execution. So if for every transaction you have to create a new contract, and you have to seek a new set of approvals, you have to seek a new set of negotiations, then obviously transactions take longer, and that slows down the amount of cross-border investment that you get in this country. So the more you standardize it, the more you will also improve the speed of execution, which will improve liquidity and automatically improve demand for these assets. Final point, something to watch out for, which is happening in commercial real estate markets all around the world, is that the new tenants for office buildings or even retail are not your traditional industrial or financial services tenants. They are technology giants. So if you look at, let's say, Canary Wharf, which we own in London, we worked really hard to get Alibaba to move into Canary Wharf because we were very keen to capitalize on that sector. Once Alibaba moved in, then we have almost 15 other tenants related to the technology space moving into Canary Wharf, and that creates demand for residential in the area from young people who work in those companies, and that creates demands for restaurants and other retail in that area. And now, essentially, it changes the dynamic of the area itself. If you look at Manhattan, 5 years ago, majority of the new tenants in Manhattan would always be hedge funds or banks. But now, if you look at Midtown, it's all about Google, Facebook, Amazon, LinkedIn. Literally, around 6 blocks have been taken over by these tenants. And when these tenants come in, they bring with them small to mid-market tenants also. So London is working really hard at bringing these kind of companies to London. New York is obviously working at it. It has a natural advantage because of Silicon Valley being in the US. France is also working very hard towards it. And I would say for Milan in particular, it is key because it lends itself to those kind of companies. The lifestyle in Milan is so attractive for young people that it's a no-brainer that the technology companies should be coming here. But how you attract them, you need an approach, you need a strategy, and it has to be cohesive between the private sector and the public sector. But I would say that's probably one of the critical things to watch out for over the next 5 years to keep employment growth going and GDP growth going in the city. So in conclusion, I would just like to say that we have had a very positive experience in investing in Italy, and we're focusing on creating more value in our portfolio, and we hope to do more over the forthcoming years. And thank you very much for inviting me.